Welcome back to Market on Close. Time for Options Corner. Kevin Green is here to take us through the levels you need to be watching after the Fed's latest rate decision. Hey there, Kevin. So S&P has decided to take a turn lower, down about 0.2% right now. So some gyration, although no huge moves here. So talk to us about the levels that you're watching on the S&P 500 heading into the close.
Yeah, going into the close here, we want to be able to hold this 5,600 level. I think that's going to be very key, Caroline. We've been actually in a pretty consolidated range here today, just overall, after we had that, after we defined it here. Now, the Fed meeting so far, when you're looking at the commentary, did it provide a lot of fireworks? I would say it did not, actually. I think it was right in line with the street's expectations, but the market's probably also reassessing President Trump's comments around keeping the 145% tariffs in place before these meetings over the weekend. So I think that's something to contend with here. When you're looking at the flows, there's going to be some pen risk sitting at 5,600. So let's be mindful of that. And going to the upside here, 5,630 is actually going to be the first area that I'm looking at, even though 5,640 actually has the confluence or that major structure of short calls sitting there here. But once again, we just had the news flow that just didn't really cooperate with some of the bullish positioning that we saw in the market. And actually, you can see that with the volatility markets as well. VVIX or Vol, the volatility index of the VIX, if you will, has still actually stayed pretty elevated even post this meeting. And what's a little bit concerning right now is that we have not seen a backfilling of liquidity back into the E-mini S&P book depth. And that's just something I always keep an eye on. We've actually seen liquidity increase and book depth actually get healthier over the last couple of trading sessions. And it's not out of the ordinary that we see that contract as we have a major event like today. But after the event, usually that liquidity comes back into the market. And that's just not the case. What I get also a little bit concerned about is the advanced decline line, if you're looking at it for the NYSE advanced minus the declining stocks here, is actually making new lows. And if you look at some of the mega cap names that we try to rely on here, obviously Google's having its own type of day, but NVIDIA, Google, Microsoft for that matter, all look like they're trying to hinge lower, and that's really not great. You want to be able to see those stocks really hold up here in order to try to get us an opportunity to try to close at least at this 5,600 or try to hold the 50-day moving average for the S&P 500. That's also going to be a key area to focus on here.
Yeah, Amazon and Meta, the only Mag 7 names firmly in positive territory right now. Netflix higher today as well. All right, how about on a daily chart? What levels are you looking at a little bit further out?
Yeah, so the daily chart, I don't have any changes when it comes to the level. 5,700 to the upside here, 5,400 to the downside. But I really want to kind of focus on two things. The candle structure. We have almost, let's see how we close out today, pretty much three doji candles in a row. You could say maybe yesterday was a little bit more of a shooting star candle, but what does that really mean? It shows that there's indecision in the market, maybe a little bit of an exhaustion period taking place here, even though we're holding up key areas of support, that 5,600, the 50-day moving average, which is sitting at around 5560.8. But because of this stalling out, especially for today, which kind of took me by surprise, I thought we might actually see some action here in the market and actually see a directional trend taking place. Because of the stalling out, you actually have some of these momentum indicators actually flashing maybe sell signals in the market here. The first one that I have at the top there is going to be that stochastics, and that fast moving line, that red line here, has crossed the overbought level here. And if you kind of go back and look, you just over the past 3 months, which is what we have this chart, these crosses where the fast moving average crosses below that purple moving average, which is the slow moving average, and that cross below that overbought territory also then usually coincides with sell-offs. We had that back in February. We also had that same type of cross taking place back around middle of March, end of March, if you will. And now we have another one. Also looking at the CCI, which measures the 14-day moving average and the price action compared to that average, or the deviation, if you will. That also has given a sell signal on the daily chart. So the weekly is still holding up. Daily chart says, hey, sell signal, but that doesn't mean that we have to make new lows. It just means that maybe a pullback is taking place because of the stalling and price action. And unfortunately, going back to the fact that the news flow really wasn't conducive for any type of major push to the upside, kind of signifies that maybe these technicals are starting to hold up. And unfortunately, that dispersion trade that we talked about yesterday doesn't seem like it's going to come to fruition as well as volatility continues to be elevated.
Okay. Yeah, I was actually just thinking about that dispersion trade from yesterday. All right, so I know you also have a dollar 10-year chart to tell us about, so fill us in on that.
Yeah, so the dollar 10-year kind of correlation here is actually very interesting when you kind of think about it. Now, one thing to just kind of note, you are seeing obviously a little bit more of a correlation here, but you want to keep your eye out on where the dollar is really going. We saw a lot of strength moving to the upside for the dollar here today because of this announcement that's taking place, and rightfully so. You saw a consolidation for the dollar index over the last couple of trading sessions here, and it seems like we're trying to retrace higher, but that will have a little bit of an impact when it comes to not only treasuries, but also commodities. Gold is making a move to the downside, even though we have a pause that's going to be taking place, maybe some uncertainty for a June rate cut here, as well as the tariff uncertainty. So something to just kind of keep your eye out on. We are seeing a little bit of a divergence for now, but overall, once again, we want to be able to hold the 5,600 level for the S&P 500. I think that's going to be critical for us to try to continue this rally that we've seen over the last couple of weeks.
Okay. All right. Kevin Green, thanks so much for those charts and your technical analysis. Really appreciate it.